A whopping 13% of all American adults own crypto. Telegram may introduce a Tron coin-powered ecosystem. Chinese Metro starts accepting crypto payments. 3 Arrows Capital directed by court to make all data accessible. Bitboy Crypto says he's dropping defamation charges against fellow YouTuber. Chipmaker Nvidia's mining chip revenues continue to drop. How Michael Saylor was able to raise $650 million at basically no interest. Co-CEO of Alameda steps down from his position. Court allows Voyager to pay retention bonuses to its employees. Tron is very undervalued as it uses 99.99% less energy than Bitcoin and Ethereum, says a crypto researcher. Hello everyone, and welcome to the Daily Crypto. We are back with yet another info-packed video for you, but before we get started, let's look at where the market stands with the Fear and Greed Index. The index is sitting at 25, the same as yesterday. This is because Bitcoin hasn't made an impulse move, but as soon as it starts moving, we will see the sentiment change rapidly. At the time of recording this video, Bitcoin is trading at around 21,500, whereas Ethereum is slightly up at 1675. With that being said, let's get down to the video. According to a recent research by the personal financial comparison website Finder.com, cryptocurrency adoption in the United States has increased, with approximately 13% of American adults having crypto in July, up from 10% of American people owning crypto in January 2022. Finder.com provided CryptoNews.com with the following statement regarding the survey. The data for July is rolling average of the April, May, June, and August reports, which display the rolling averages of May, June, and July. The survey has been ongoing since April 2022, according to a spokesperson for Finder.com who spoke with Crypto News. The website obtained a total of approximately 200,000 replies from users located all over the world, of which 10,000 were responses specific to the United States. According to the results of the poll, males living in the United States are far more likely to own cryptocurrency. In July, males made up 74% of crypto holders, while women made up 26% of the total. The creator of the Telegram chat app and messaging platform, Pavel Durov, has floated the idea that the company may one day introduce a marketplace backed by blockchain technology that would allow users to buy and sell usernames, emojis, and other app-based commodities. A blockchain project that was formed from the wreckage of Durov's own notion of a worldwide stablecoin. The Tron network has received praise from Durov, who has also lauded its efforts. Durov stated in a message that he published on his personal Telegram channel that the ownership of usernames would be protected on the blockchain through the use of non-fungible token-like smart contracts if such a marketplace were created. He asserted that other components of the Telegram ecosystem, such as channels, stickers, or emojis, might ultimately also become a part of this marketplace. As the Chinese central bank digital currency continues its acceptance campaign, the city of Ningbo, located in Zhejiang province of China's northeast, has announced that all 125 of its metro stations now accept digital yuan payment. Ningbo is home to over 9.5 million people and boasts a bustling business community. It is home to the only free trade zone in the province of Zhejiang, as well as a deregulated high-tech zone, and one of the only industrial parks in China that is controlled entirely by foreign investors. In addition to this, it is a significant naval facility that is home to the majority of the Chinese Navy's East China Sea fleet. As a consequence of this, its public transportation network is exceptionally active. It now consists of 5 metro lines, and an additional 3 are in the process of being constructed. The liquidators of the bankrupt Singaporean crypto hedge fund 3 Arrows Capital have been granted permission by a local court to access vital records, which will allow them to acquire additional information regarding the assets held by the defunct company. Teneo, an advice company, petitioned the Singapore High Court to recognize the liquidation order for 3 Arrows that it had acquired, and the court granted the motion. Teneo was selected by a court in the British Virgin Islands to take on the role of liquidator for the cryptocurrency hedge fund in June of last year. It is reported that Three Arrows owes more than $2.8 billion to its creditors in unsecured claims. According to the individuals with direct knowledge of the proceedings, this move will give Teneo the ability to request any and all relevant data, including but not limited to financial filings, bank accounts, crypto holdings, shares, and properties, among others. Armstrong had filed a lawsuit against Atozi for allegedly defaming him in a video that Atozi uploaded in November 8 titled, "This YouTuber Scams His Fans." Armstrong had claimed that Atozi had defamed him. Cryptography by Bitboy. Following the discovery of the lawsuit by court watchers, there was a commotion regarding Armstrong's commercial tactics. According to him, filing the lawsuit was an attempt to preserve his reputation against a video that, according to him, gave the impression that he will be probed by the Securities and Exchange Commission, SEC. He said, "I'm not suing someone over their opinion," and that's exactly what he was doing. Armstrong stated, "I did not understand my name is now so huge that if I filed a lawsuit it would be found and made public. I didn't understand that my name is now so big that it would be found and made public." The lawsuit implied that Armstrong was suffering from mental anguish as a result of the video. During his webcast, he mentioned that he requested that it be removed. Concerning the allegation that he knowingly supported a crypto-related Ponzi scheme, Armstrong stated that the project he approved was not the one that went live, and that he and his followers both lost money as a result of their participation in the scheme. After the incident, he said, the channel made some adjustments to the way it handled sponsored material. The chip giant Nvidia reported that sales of its cryptocurrency mining processors were minimal, once again for its 2023 fiscal second quarter, which ended on July 31st. This figure is far lower than the $266 million it reported a year earlier. The semiconductor manufacturer described its CMP sales in the same term as the preceding quarter, which resulted in decreased revenues for its OEM and other business segment. According to the analysis provided by the company's chief financial officer, Nvidia's overall second quarter revenue for the business unit dropped by 66% to $140 million when compared to the same quarter last year. The decline was caused by fewer notebook OEM sales. The OEM and other division was only responsible for roughly 2% of the overall revenue in the second quarter. The price of cryptocurrencies in general continued its downward trend, which was mirrored by the falling revenue of the CMP unit. CMP revenue for Nvidia's fiscal fourth quarter dropped by 77% compared to the prior quarter's total. Michael Saylor is going to tell us how he was able to raise billions of dollars specifically for the purpose of investing in Bitcoin, as well as explain the rationale behind his company's approach for investing in Bitcoin.
So the next step in our journey was, in addition to me starting to communicate why we had done what we'd done, the next step in the journey was to go out and buy more Bitcoin. So we started buying more Bitcoin as part of the Treasury Reserve strategy, and that got people's attention. Then when the stock got to the 300 range, that was the highest it's been in a decade, 300. So we started thinking, well, maybe we can raise more money. And so we went back to the convert market, and we were trying to raise $400 million in a convertible debt offering, but it was extremely popular and we were oversubscribed. So we upsized the deal to $650 million. So that was a screaming home run. We had proposed a 32 to 37% premium. We priced it at the 37.5% premium, the high end of the spread. We'd proposed 1.25% to 0.75% interest. We priced at the low end of the interest rate. So we raised $650 million at 75 basis points with a strike price of $398. The stock had not traded at $398 in a decade. Mm-hmm. So it seemed like reasonable. If you could sell $650 million of stock at $398 a share, it seemed like a reasonable thing to do at the time.
His fame skyrocketed after the MicroStrategy investment was made in Bitcoin, which caused the price of Bitcoin to begin rising and attract the attention of the general public. Michael was fortunate in that there were many investors who were interested in becoming a part of the micro startup that he was familiar with. After that, he made an effort to raise $400 million, but the proposition was so well received by backers that he was able to boost it by more than 50% to $650 million at an interest rate of just 0.75%. This occurred as a result of the fact that the price of a share of MicroStrategy stock increased by more than $300, which provided Michael with a great deal of leverage to borrow capital on his own terms. According to a tweet published by Sam Trabucco on Wednesday, he will be leaving his position as co-CEO of the cryptocurrency trading company Alameda Research and transitioning into the role of advisor. Sam Bankman-Fried, the founder of crypto exchange giant FTX, also founded Alameda, a company that conducts a massive network of trading, yield farming, startup investments, and market creating. Alameda is a competitor of FTX. According to what Trabucco wrote, fellow co-CEO Caroline Ellison will continue in her role as the company's single CEO. In a series of tweets, Trabucco revealed that he had considerably scaled back his responsibilities at Alameda over the course of the past few months. He explained that he had reached a moment in his life where he needed to prioritize other things, such as his personal life. He continued by saying, "I need to rest," and now he is really pleased. Trabucco has stated that he does not have any additional cryptocurrency initiatives in the works at this time. Nevertheless, he added, "I wouldn't rule anything out in the future once I feel more recovered." In October, Bankman-Fried made it clear that she was handing over leadership of Alameda to Trabucco and Ellison. Both of them were previously connected to Bankman-Fried, which founded Alameda in 2017 with the intention of capitalizing on arbitrage opportunities in the cryptocurrency market. In 2018, he hired Ellison, who had previously worked with him at Jane Street. Following a ruling by a federal judge, the cryptocurrency lender Voyager Digital, which is now in the process of filing for bankruptcy, will be able to pay retention bonuses to more than 30 of its employees, totaling $1.6 million. Additionally, Judge Michael Wiles has consented to keep secret both the identities and titles of the employees who are candidates for bonus payments. Voyager submitted their request for authorization at the beginning of this month. This was a move that was rejected by Voyager's organized creditors on Friday. The United States Trustee's Office, which is a bankruptcy watchdog that operates under the auspices of the Department of Justice, also objected to the names and titles of potential recipients being redacted. The U.S. Trustee's Office suggested in its own filing that the potential recipients may not be eligible for this type of bonus. The senior management team is not involved in this program, and it is expected that information pertaining to these persons will not be accessible to the general public. It has come to our attention that not a single shareholder, creditor, or other economic stakeholder has raised an objection to move to seal. Both the United States Trustee's Office and the UCC, Official Committee of Unsecured Creditors, asked for this information, and we sent it to them both. The UCC was the only entity who specifically requested it. No one has been denied access to the information, despite having made a request for it. During the hearing, attorney Michael Slade, who was working for Kirkland & Ellis and defending Voyager, stated the following. According to the analysis, the fact that Tron's consensus mechanism is based on delegated proof of stake rather than other techniques, like Bitcoin's proof of work, contributed to the cryptocurrency's smaller carbon footprint. The DPoS protocol is dependent on users who stake their native TRX tokens to nodes in order for transactions to be validated and the network to be maintained. The Tron Foundation, which is responsible for the development of products for the Tron blockchain as well as its maintenance, is the entity that requested the study. The Cryptocurrency and Blockchain Research Institute monitors over 20 networks and produces reports on the sustainability of these networks, as well as the total ecological damage they do, which is a worry raised by a number of cryptocurrency skeptics. POW blockchains, such as Bitcoin and Ethereum, have an energy consumption of over 83 million kilowatts per hour and 22 million kilowatts per hour respectively. Nevertheless, after the merge, Ethereum is expected to make the transition to a consensus mechanism based on proof of stake in the middle of September. In comparison, Tron has an annual energy use of 162,000 kilowatts per hour for over 2.31 billion transactions, which is over 99.9% less power consumption than Bitcoin and Ethereum combined. According to CCRI, this put Tron's energy consumption at a level that is equivalent to the energy consumption of 15 typical American households. Thank you for watching. Don't forget to drop a like and subscribe to our channel to stay up to date with all the latest market news and events. See you guys in the next video.